Hi everyone, and welcome back to a brand new episode. I'm Marcus, and today we are looking at Caterpillar, ticker symbol CAT. We'll cover the income statement, balance sheet, cash flow, key figures, our key feature, and the technical aspect of the stock. Should we be buying Caterpillar right now? Well, let's take a look. As I mentioned, we're looking at Caterpillar, ticker symbol CAT, and they are traded on New York Stock Exchange and are in the technology sector. If we go down to the screen, we can see that their market capitalization coming in at $86.6 billion and the revenues at $54 billion. PE ratio coming in at 13.7. I like that. Profit margin is at 12.5%. That is a bit too low for me. Price to sales ratio is at 1.6. That is a go for me, but the price to book value is too high for me, so that is a no. I like the fact that they pay a dividend of $4.53, which is great because I like those recurrent income. Effective return at 2.8%. that is a bit low. I would like to see a range at least at around 3% or higher, around 6%. That would be acceptable, but at the same time, with everything that is going on with the economy right now, I believe we'll see better buying opportunities as time goes on. Return on equity coming in at 41%. That is a go for me, but the return on assets is a bit too low for me. So if we look at the chart, we are currently traded at $179 per share. If you go down to the moving average, we can see we are below both the 50-day and the 200-day moving average. Basically, it's telling us that we might see the stock price decline. And if we look at the chart, we can see that we are more or less moving in a negative trend channel, and have been doing so for quite some time. We recently touched the support line, and now the stock is moving even higher, but we have a key area levels around here that we need to be very cautious of. But we'll take a closer look at the technical aspect further down. But now let's head over to the income statement. What we can see here is that the total revenue went from $45.5 billion up to $51 billion, and these numbers have been growing year by year. Fell off in 2020, recovered in 2021, so the overall trend is positive. Gross profit went from $11.4 billion up to $15.5, and these numbers have been improving. Fell off a bit in 2020, but overall trend is positive. Net income went from $754 million up to $6.5 billion, and these numbers have been improving. Fell off in 2020, but overall trend is positive. I like it. Now let's head over to the balance sheet. What we're interested in is that the current assets versus the current liabilities, and we can see there is a huge difference between the current assets and the current liabilities, and that is a plus. Basically, if they were to convert it to cash in order to pay off the current liabilities, they would still have a lot of capital on the table, which is amazing. But they are far from being able to pay off their total liabilities, which is negative. But at the same time, if we look closely, they have been putting effort in order to maintain their debt levels. We can see here 63, 64, 63, 62, 66. So even though the numbers are increasing, they are putting effort in order to keep it intact. So that is a plus. But at the same time, the debt is growing. That is negative. Outstanding shares, we went from 597 million shares up to 535 million shares, and these numbers have been dropping year by year. That is a plus. Basically, there are fewer and fewer available shares out there, which is positive for us investors, basically making our share of the company bigger. So that is a plus. So that is great. Now let's head over to cash flow. What we're interested in here is that the operating cash flow versus the capital expenditure, we can see here it came in at 7.2 and the capital expenditure at 2.5, making a difference of $4.7 billion, which is amazing. We can see that the operating cash flow went from 5.7 up to 7.2, and these numbers have been improving. Fell off a bit in 2020, but 21 we recovered, but overall trend is positive. Capital expenditure went from 898 million up to 2.5 billion, and these numbers have been improving. Fell off a bit, but overall trend is positive. Basically, their operating cash flow is improving, but also the fact that they continue to invest in their business. That is great to see. I like that. Now let's head over to the key figures. What we can see here is that the earnings per share went from $1.26 up to $12, and these numbers have been improving. Fell off a bit bit in 2020, but overall trend is positive. Revenue per share went from $76 per share up to 95, and these numbers have been improving, fell off a bit in 2020, overall trend positive. Equity per share went from $23 up to $30.8 per share, and these numbers have been improving, that is plus. Dividend per share went from $3 up to $4.35, and these numbers have been improving year by year. That is a plus, because I like those recurrent income. Also, the fact that the income is growing year by year, that is a plus. Dividend payout share 287, that is just way too much. But here we have 37, 34, 78, 74, too high. But overall, I'm liking what I'm seeing here. But that is a plus. But at the same time, I would like to see them maintain a level below 60%, because I want some of the capital to remain in the business for investments, acquisitions, or just overall strengthening the finances as we go through uncertainties. Gross margin went from 25% up to 30%, but we see here these numbers have improved, but we fell off 2 years in a row here. But overall trend is positive. That is great. But at the same time, gross margin of 30%, that basically tells us that the cost of goods sold is very high. But at the same time, we are seeing that they are becoming more and more efficient. So that is positive. Operating margin went from 9% up to 16%, and these numbers have been improving, fell off a bit in 2020, but overall trend positive. Profit margin came in at went from 1.6 to 12.7%, and these numbers have been improving. Same thing here, fell off in 2020, but overall trend positive. Return on equity tells you about a company's ability to create return on their equity, and it went from 5.4% up to 39%, and these numbers have been improving, fell off here in 2019 and 2020, but overall trend is positive. Return on asset went from 0.9 up to 7.8%, and these numbers fell off here again, but overall trend is positive. I like that. Now let's see here, the solidity basically tells you about the company's financial strength for the long term, and we went from 17.8%. 17.8% up to 19.9%, and these numbers have been improving year by year. That is a plus. Balance sheet liquidity, same thing as solidity, but here looks at the company's financial strength for the short term. We went from 0.9 up to 1.6, and these numbers, we fell off a bit here, but overall trend is positive. Debt equity ratio, debt ratio went from 4.5 down to 4, and we can see that these numbers have been dropping year by year. That is plus. That is amazing. Basically, in 2021, a debt ratio of 4, that means that they had 4 times more debt than equity in the business, and seeing that these numbers are dropping, that is just amazing. So guys, we have gone through the income statement, balance sheet, cash flow, key figures. Our key feature, which is the stock analyzer, basically what it does is that it gives you a simplified, holistic overview of the company's performance, and it saves you a lot of time. We can see right away is that the company, let me see, we can see right away that the company had a PE ratio below 20, which is a plus. They do pay a dividend, which is a plus, and the dividend payout share is below 60%, that is a plus, and dividends increased over the past 5 years, that is a plus, and the number of outstanding shares have decreased, which is a plus. Revenue decreased over the past 5 years, that is negative, and profit margin below 15%, that is negative, and the profit increased over the past 5 years, that is plus, and the current assets are much greater than the current liabilities, that is a plus, and solidity have improved, balance sheet liquidity have improved, and the debt equity ratio have improved, and the total liabilities, even though it has been grown over the past 5 years, they are putting a lot of effort in order to maintain the debt level, which is a plus. But seeing that these numbers are growing, that is negative. Guys, as you can tell, it gives you a simplified, holistic overview of the company's performance, and it saves you a lot of time. And you can have this software along with everything we've gone through, plus access to a discussion forum where you'll be able to chat with me along with other members for only $10 per month. So make sure to head over to comus.se and become a member today and support the channel. Okay, thank you. But now let's take a look at the technical aspect of this of the stock. So here we have the chart, as you guys can tell. Let me lay down some lines here. You can see that we are moving, as I mentioned before, within a negative trend channel here. something like that. And we just recently saw that the stock, as you can tell here, we have key areas here. Every time we go down here, touching the support line, the buyers come back and push the stock price even higher. Same thing here, as you guys can tell. But basically, I believe this increase is due to the Bank of England coming back in and buying bonds, and therefore it pushed the stock price even higher. And a lot of buyers saw that as a positive thing, came in and invested. But that's why we are seeing a lot of buyers coming in and pushing the stock price even higher. So if we were to buy over here, we could see a potential move of 16-17%, which is a great trade, but it's a very risky trade, because if we look closely, we can see here that we have a potential resistance level up here around $179, $178 per share. So we could see a lot of consolidation here, uncertainty arise over here. We might see the stock price bounce back down and continue the trajectory over here, or we might see the stock price increase. But it will be very interesting to see here. I wouldn't be buying here because it's too much of a risk. I would rather wait for the stock price go down closer to the support line. As we get closer and closer, the less the risk is. And whenever you are buying up here, we could either see the stock price go down, and therefore you would be losing capital, or it could be we could see a bigger move. But I'll be rather waiting and see the stock price continue down before buying the stock. But as I have said before, right now I'm not buying. I'm being patient, waiting for better buying opportunities, seeing how the overall economy is developing with the increased interest rates, and we might see in a couple of months how that affects the labor market and so on. So that'll be I'll be waiting for that to see, because we know the economic variables are lagging, so therefore it's too early to say what the price points will be going forward. But I know and I believe that we might see a continued decline in the financial markets, and therefore I'll be waiting instead. But I'll be buying, but I'll be just waiting for better buying opportunities. If we go over to the market just quickly to look at it, we can see that let me see here, that the all US indices are in green or positive. We can see here is that the Nasdaq 100 are trading lower and lower levels, and I think we'll continue to see this type of move going forward. Even though we are seeing that a bit of recovery here, we might even see the stock price move towards the resistance line. But looking for the long term, mid and long term, I'll believe that the stock price will financial markets will keep going further down. And we can see, if we look at the sectors, we can see all major sectors are in green. So guys, that's all I have for this episode. I hope you have enjoyed this one. If you did, please give me a thumbs up, comment, and subscribe. And if I can be of any service to you, please let me know. And if you have stocks you want me to do a video on and take a look at, just let me know in the comment section. And as always, guys, I hope to catch you on the next one. And take care for now. Bye-bye.